one day Bitcoin will be as boring as gold, or as boring as the S&P 500. It won't go up that much in value, it won't go down as much in value, it will basically be stable. And the question is, how far away are we from that future? Will Bitcoin already be there once it has the market cap of gold? So that's around 10x from here, around $500,000 US. Or is there more room to grow? Is the market still very immature? So what you see over here is just 1 month of price data changes. So on one day, the price of Bitcoin moved 10% up. Another day, it went 20% down. But what we are actually really interested in is how much in general does the price move? Like how unstable is the price? So what we're going to do is we will flip this chart, the bottom half of this chart. We're going to flip this over and look at the absolute values. This is how it looks like. So this is the same chart, just that we now flip over the bottom bars to the top. So now we have a measure in this month, at least, how much did the price move in general. Now you can't do much with 1 month, so let's just zoom out. This is 10 years of price data. So you can see here something very interesting. We basically have this clustering. In certain periods of time, the price doesn't move at all. In other periods of time, you see that both positive as well as negative days are more frequent. So when the price goes up really quickly or goes down really quickly, we have both very positive and very negative days. So let's flip this chart and see how it looks like. We get this. Over here, the 40% day, this was the March crash of last year. But we have even bigger movements in the early days. So this is 10 years of Bitcoin price history. Now, just by looking at this, we can't really tell, did actually the fluctuation, the daily fluctuation, increase or decrease a lot. So let's just put a regression line on this. This is now a regression line trying to represent with a linear equation the development of how the price goes up or down over time. And if we look very closely, we can see that this line does have a decreasing slope. It goes down a little bit, but I can't really tell the details. So the next chart, we're going to zoom in. We're going to just look at the scale of 5% to 10%, but it's still the same time frame, everything else equal. So now we can see the slope of the regression line a bit more clearly. It starts at around 3.5%, goes down to a bit under 2.5%, but still we cannot really see how well does this line actually represent the changes in price movement. So what I did then afterwards is cluster this into the different years. So what was the average price movement for a given year in Bitcoin? And here we go. At 2011, we had on average 6% of price movement. In this year so far, we have around 3.5%. And in general, again, with a regression line, we can see a decreasing trend from 4% to something around 2.5%. Now I did the same for the weekly price changes and the monthly price changes. The picture doesn't really change much, but just for completion, we can basically see that if you buy Bitcoin and hold it for 1 month, on average in 2013, you would have expected a price change of 18% on average. One problem with this regression line is that it doesn't represent the data very well, right? We have data points all over the place, very far away from this regression line. So maybe there's a better way to actually model the data and find a better trend in how the price movements develop over time. So what I did is I calculated moving averages. And this is the 1 year moving average. So just as a comparison, this was the regression line. This is the 1 year moving average. And we can still see, even if we do quite a lot of averaging, the trend is not very clear. It goes from 4% to 2 to over 4%. So we probably have to do a bit more of averaging. So I go from 1 year now to the 2 year. So that looks already a bit smoother. To the 3 year, That's better. And to the 4-year. So I think the 4-year is probably the best of those approximations because Bitcoin seems to in general move in 4-year cycles. We have the 4-year halvening, the new supply gets cut in half every 4 years. We also see in the price data that the peaks and the trough are around 4 years from each other. So a 4-year average is probably not a bad idea. So what do those charts tell us? I personally find this very interesting, because the price volatility went down from 3.5% to 3%, or if you take the regression, from 3.5% to 2.5%. So we do have some drop in volatility, but at the same time, the market cap of Bitcoin went up from the millions to the billions to now $1 trillion. So we have several orders of magnitude that the market cap went up, so it takes way more money to actually move Bitcoin by those percentage points. So it looks like Bitcoin's market is still relatively immature. You still see a lot of new capital inflow. And there seems to be plenty of people that are not yet invested, that are on the sidelines, that might invest in the future. In a mature market, you would expect the price of an asset only to move. Say when the economy doesn't do well, then the S&P 500 drops because people evaluate the stocks in a slightly different way. But when the fundamentals or the economy doesn't really dictate the price movements as much, that's an indication to me that the actual price drivers are just related to new investors coming in and out of the market. And it seems to not be so much a repricing of the underlying asset based on what's going on in the economy. Now let's make the comparison to gold. Where is currently gold at? This is approximately 10 years of gold movement. Again, we're going to flip the chart, just look at the absolute values, and again we have a logarithmic regression line. This is how it looks like when we zoom in, and the position of this regression line is very different to where Bitcoin was. Here we see some movements sub 1%. The tendency is as well that the magnitude of those price movements is decreasing, but just compare this now to the Bitcoin chart. Right? 3.5% to 2.5%, that's the regression line for Bitcoin. And again, this is the regression line for gold. It's a completely different world. And this is 10 years of price data. So what this tells me is Bitcoin went several times 10x and is still at 2.5% daily price fluctuations, while gold is below 1% on average in the last 10 years. And so if we now just go another 10x in Bitcoin, for me it doesn't look like volatility of Bitcoin will be comparable to gold. So when Bitcoin reaches gold's market cap, I personally see that Bitcoin will still fluctuate way more than gold does. So Bitcoin's market will probably mature at a way higher price point than at the market cap of gold. There's probably way more room to grow until everybody is invested that wants to be invested. Let's now also look at the moving averages. This is gold. So here we can already see just by averaging over 2 years, we get a very straight line here. We can average further to 3 years and 4 years. It doesn't change much. The price fluctuations in gold are pretty stable. Now let's compare this again to Bitcoin. Moving average of gold versus moving average of Bitcoin, 4 years. This is gold. This is Bitcoin. It's the same scale from 0 to 5%, but the magnitude is on a completely different level. Okay, let's jump further to the S&P 500. Again, a similar chart. Here what I find interesting is the Corona cluster. So during this Corona crash, we can see very strong negative days up to minus 12%, but also positive days in a similar magnitude. So we can see again, when prices are crashing, we see both positive and negative days. So they crash, then they correct hard, then they crash again. Now let's flip the chart. And here we see an increase in volatility, probably because of this Corona crash recently. Again, zooming in, 5 to 0%, an increase in volatility according to the regression line. And here are the moving averages. And we can see that no matter what moving average we take, 1 year to 4 years, they are relatively flat. It doesn't fluctuate too much. Volatility doesn't fluctuate too much. So let's compare all three again. Here's the S&P 500. Here's gold. Both relatively similar in price fluctuations. And here's Bitcoin. So what do I take from these charts? We can see that volatility is slightly decreasing, but it's still nowhere near where the mature markets of gold and the S&P 500 are. So I personally think when Bitcoin reaches the market cap of gold, so it goes another 10x from here, we probably have still a lot of room to grow until we really have a mature market and everybody's invested, and we're gonna reprice this based on the global economy and not so much on the adoption of investors. If you enjoyed this video, feel free to subscribe. See you next time. Bye.